Hi, welcome and thanks for joining us for another prospectus review here on L.E.A.R.N Invest. So today I'll be going through the OMNI Industries IPO Prospectus, and it came out just a few days ago, so I've had a little bit of time to go through it. So I'm going to do what we usually do here on L.E.A.R.N Invest, go through the salient points of the prospectus. We're going to start with an overview of the company. Next, we're going to look at the offer details, right? How much money is being raised, and details like how many shares, what price, opening date, closing date, etc. Then we look at the 5-year financials of the company. Now, I had a very interesting time going through the results, so I can't wait to share those details with you. And then next we look at the dividend policy. Usually we want to understand if the company plans to pay dividends, and if yes, how much. And then finally, since this is an IPO review, we'll talk about how to apply if you're so interested. So let's jump right in. So I have to say, of course, anything that we go through here is for discussion, education, entertainment, and illustrative purposes only. This should not be construed as professional financial advice, solicitation, or recommendation to purchase this IPO or any other companies mentioned here today. So let's start with a little bit of the company history. I think that's a good place to start. So the company was incorporated back in September 1974 as a private limited liability company. And then, of course, on February 2024, the company converted to a public limited liability company and adopted the articles of incorporation in replacement of a memorandum of association and articles of association, right? So pretty much they put themselves in position to list, right? So today the company is operated and owned by Messrs. Von White, that's the chairman, and Patrick Kumst, that's the managing director, and Vincent Clark, that's a sales and managing director. And then of course has staff of about 81 permanent and 25 contracted full-time employees, and approximately 32 employees, or 30% of the company's employees, are administered under a labor agreement. And then of course it says here the company is committed to building talent and providing a safe and fair workplace for all of their employees while adhering to local labor laws and so on, right? So it says here with its wide range of product offers, the company services both local and overseas markets in 3 main segments, right? And this is the details that we want to focus on. So construction is first, so consisting of mainly PVC pipes and fittings and related products, and representing the company's major product line offering. These items are used mainly in the plumbing and electrical work. So of course, a company that may come to mind for you is Fosrich in terms of a competitor, a company that we've discussed here before. And it says here, as well as for water distribution and irrigation, these products are distributed both through large wholesale and hardware stores. And I heard them mention on Taking Stock, wasn't Taking Stock, the interview with Kalila, that companies like Phil's Hardware are one of their major distributors or channel for delivering to clients. So it says here, next is plastic housewares. So these product lines are marketed to businesses that address daily household needs, such as cooking, cleaning, laundering of clothes, and are also distributed through large wholesale and hardware stores. Right, so I have some stores in mind, but of course I don't want to call in the names, just in case they aren't distributed through those channels, so we can ask when we get to the CEO interview. And then finally, industrial packaging. This consists of products for food distribution and industrial material packaging, and are sold directly to businesses that use them to package their own products. So this gives you a good idea as to the company's products and services. Great amount of detail on their website. They have a whole list of products, and of course the prospectus would share some screenshots of their products as well. So it's good to go through it, but I didn't see anything that the average person wouldn't be familiar with. Maybe some of their larger plastic products or PVC products, but for the most part, you should understand this company fairly well. So it says here that they develop and distribute products and offer services that can be grouped into 4 main categories. So that's PVC pipes and fittings, hardware products, houseware, that's over 200 products, and industrial packaging, right? So those are the main areas. And then of course I have some general products here. And this is where they go through the list of it. I mean, for the purposes of this review, I'm not going to go through it, but this should give you a pretty good detail as to what they cover and the type of company that they are. So it says here in terms of a strategic plan for the company. One second here. Yes, I'm just trying to bring it over on my screen so I can see it a little bit better. So it says here, in terms of their strategic plan, they have plans to establish an e-commerce platform to digitize and improve order efficiency. So one of the questions I would have here, this seems to be a platform mainly for their B2B clients. That's what it would appear to me, but it would be interesting to see if they're planning to target maybe retail clients as well. It says the technology will be utilized for increased visibility and streamlined purchasing. Benefits would include easier access, convenience, and reduced order to delivery time. And it says here they aim to increase its retail customer base, currently at 5% of sales, and they expect it to grow to about 20%. Okay, so this is saying here that they're planning to grow their retail base. So I imagine that it could be for both. They may have their B2B clients that they want to make ordering efficient for, and then they may have their retail clients that they want to be able to sell those products easier. It'd be interesting to see, whether or not this actually comes through and how it does, because we know other companies on the exchange have online platforms for their clients. Then it says in terms of expansion, the company has already contracts locked in with clients in Panama for beer crates. The budgeted export is US $150 million annually. So that should be about $155 million. So we'll see what impact that has. Panama is viewed as a gateway for expansion into other territories. And so let's move on. And it says here in terms of retooling, they're looking to decommission some existing machines and replacing them with new, more efficient ones. Including 3 injection machines, and they expect a cost savings projected at about $6 million per year due to low energy consumption. And the prospectus mentioned them moving to, for example, implementing solar and trying to reduce their electricity bill, something that a lot of manufacturing companies have seemed to do. We heard Lasco did something recently. I know, I believe Fosterich might have mentioned that as well. So it's common for manufacturing and distribution companies to try to reduce their energy bill. So it says new machine can double the current production capacity. That's always a good sign when companies seek to do that. It means they see potential to generate more revenue. And it says here the company is planning to acquire equipment, including a Schuler label printer and a bottle crate mold. So the mold would be, I guess, what they use to design the crate. And it says more room for expansion is there in terms of paint packaging, potential for growth in pipe, income given the accelerated water projects, and developing new products in the next 24 months, including bread trays and 20-liter motor oil buckets and plastic chairs. I can certainly say that based on the number of events, there certainly could be a market for plastic chairs, right? So these are their retooling and new product focus based on what we have in the prospectus. All right, so let's look at the details of the offer. So it says here that they're offering up to 500 million participating ordinary voting shares. And it says at an invitation price fixed at $1 per share, payable in full on application. At least 120,931 shares are available to the public, right? So if you're watching this and you're not in the key partners pool or the employees reserve pool, your price would be $1, and of course that pool would be 120 million. We'll talk about the impact of that later. And of course, one of the questions we would have is why are they seeking to raise 500 as opposed to 750? My guess is that it could be, I guess, based on when they were preparing for this. Maybe they couldn't take advantage of the 750 in time. But then I guess the question is, why didn't they wait a little? Anyway, we'll get there when we get there. So it says up to 379 million participating ordinary shares are reserved for subscription by reserved share applicants, right? So if you're new to this, there's usually a reserved pool for key partners of the company and employees, right? So the employees have an opportunity. Now, usually how it works is that there's a spillover. If the pools aren't fully allocated, then those shares spill over, and then of course we hope that may spill over to the public pool, but it's just something that is there. And then of course we have here lead broker, which is NCB Capital Markets, getting access to 125 million shares. So what we have here next is just the share capital. So I like to go through this information because I like to see how the company kind of transforms on its way to listing or preparing to list. So of course it says here there is no maximum to the share capital. That means they have the ability to issue more shares in the future. Shares issued prior to invitation, that'd be 2.25 billion, and new shares issued is 250 million. So what they've done is existing shareholders are selling 250 million shares. They've issued 250 million new shares. So that makes a total of the 500 million that's now available to the public, right? And what you're seeing here is, so for those who may not understand this part, essentially they would have done a stock split pre-IPO. So that stock split was able to provide enough shares for the public to be able to get the 20% minimum that is required by the JSE. So you would have the opportunity to purchase, right? So this multiplication you're seeing pre-split to post-split, that's what simply allows for enough shares to be able to sell. And what I'll do is go through the next slide, which speaks to where the shares are being sold from, right? So these are the different pools. We went through them already. So as I mentioned, 250 million from existing shareholders, 250 million new shares. Now the shareholders that were selling, if you look at this list here, it would be the MF&G Asset Management. All of those shares seem to be available for sale, and about half of NCB's allocation. So that would bring you up to 250 million. And I did the math on a later screen. And then, as I said, they would have issued some new shares, right? So this is what the shareholdings will look like before and after the invitation, just showing the percentage ownership for the existing shareholders. It's always good to see this number. So of course, NCBs, as I said, would have been cut in half, and then MF&G would be selling all of their shares and they would have issued new shares, right? And then on this screen, we have the math that I mentioned. So 81 million shares from NCB, 27 million and 141 million gives us a total of 250, which would be the shares. So of course, the obvious question here is, why is NCB selling? But also note that they do have the opportunity as a part of the lead broker pool to make that available to, I guess, their clients, partners, whoever NCB may want to invite to apply. Now, it's not strange to see the lead broker selling some shares. My guess here is that they just wanted to make enough available to meet the 20%. That's my assumption. Of course, we'll ask them when we speak to them, but I'm not necessarily alarmed by the selling of those shares. They'll still have a sizable position of 81 million shares. I'm more interested on what they do after the company list, right? Just if anybody's asking, about that, because I figure that may be, a question that persons may have. And then, of course, after listing, share ownership after invitation. So as I mentioned, I'm more interested in seeing what, for example, NCB does with their position. We've seen, for example, other brokers, add to their position in the company after IPO, depending on how the company is trading or what future plans the company may have. Of course, I'm not expecting that, for example, the top let's say the Coombs family selling anytime soon. But of course, we'll wait to see. But it's good that it's not necessarily concentrated to me into one person at the top, is what I'd say. Because some companies we see the top shareholder as like 80% of the shares or something like that. I don't necessarily like seeing that. So the fact that it's kind of spread out a little bit, albeit in the same family, it's good to see, I'd say. And the reserve pool, of course, we'll see what names appear out of that after listing. The lead broker pool, we'll see what comes up there as well. So my guess is you'll see the top 10 forming, and we'll probably see how that kind of pans out over the coming quarters, right? So let me pause for a second here and check the chat. All right, so Limitless saying, what do you think of NCB being selling shareholder but also having a reserve pool? So it's not strange to me, Limitless, because it makes sense. I see it as them wanting to maybe give some of their clients or partners, access to shares, right? I don't think they'd sell shares just to purchase them back. So they're likely, referring to their, clients or persons they would have had arrangements with. And that's the benefit you have as lead broker, right? The guy from NCB Capital Markets said the increased share amount on the junior market hasn't taken effect as of yet. Okay, yeah, so that makes sense, right? These things usually take some time. Shelley is saying, so NCB selling their share yet. So that's what I'm saying, Shelley, and I don't think they're gonna buy it back. It would not make sense. My view of it is that they're looking to either their key clients or partners for them to be able to purchase that. That's what would make sense. It would not make sense to sell shares only to buy it back, right? That doesn't make sense, right? So that's my assessment. We'll see when we do the interview with them. All right. Thanks for your questions. Feel free to post them on any platform you're watching. And I'll also pause here to ask you to take a moment to like the video, subscribe to the channel if you're new, follow us on all the pages that you're watching from, and certainly want to thank you for being here, right? All right, so let's talk about some key dates. So the opening date is just 3 days from now at the point where we're creating this video. So that's not a lot of time. So if you're interested in applying now, I did think it interesting that we have a Mayberry bond out now, NCB APO out right now, and this IPO. So I'd be interested to see if it closes opening day. Now, it's not a large amount of money, I'd say, right? 500 million. So it does have potential, I think, to maybe close Friday or Monday, I would say. So the usual rule applies here. Treat the opening day like the close date, I would say, simply based on the number of shares being offered. Minimum subscription is 1,000 units on increments of 100. So of course you need only about $1,172.50 to be able to participate minimum. Of course, based on the size of the offer, it's expected that if it is oversubscribed, then you're likely to get a small allocation. That's not necessarily a bad thing. We'll talk about that in another video. And of course, basis of allotment based on the details in the prospectus, say 10 days after the closing date. So that's estimated by me to be June 10th. And then 10 days after closing date is when you get refunds, and the listing of shares is usually subject to approval by the JSE. And then they'd have their listing ceremony, etc., create their ticker, all of that good stuff. So let's talk about the use of proceeds. Very important to look at. So first it says here they're going to upgrade existing machines. They're going to purchase additional new machines, something that they've alluded to before, and to permanently inject working capital into the company, and then payment of the following expenses for the offer. So every company, when they're listing, has to pay expenses, right? Fees to the JSC and the JCSD, legal fees, consulting fees, marketing fees, etc. That is not uncommon, so they usually state that openly. Now, I'd be interested to find out how these machines will improve their revenue, right? Meaning, are they, For the machines that they're replacing, is it that they're out of commission or they're just upgrading to increase capacity? And the new machines, is it new revenue lines that they're pursuing? And so on. So that is what I'd be interested to find out. Now, I did hear them say that they're targeting about 10% revenue growth each year. I noticed they didn't say a profit growth target, just revenue. So it's, to me, it's not an automatic translation. So I'd love to hear more about that. And so those are, again, just some of the questions I'll be asking just based on what I've seen so far. All right. So as you know, as I was reading that just now, I just said to myself, I know L.E.A.R.N is happy that she doesn't see them repaying debt, because L.E.A.R.N doesn't like to see when companies use capital to pay off debt. But I just thought I'd add that there. Let me see what Omar is saying. Omar says they did say 900 million liability in our books is not all debt. Some of it is payables. How much is payables? Okay, so we're going into the financials next. So we're going to look at their financials up to 2023 and Q1 2024. So we'll get to that. All right. So it says here that 51% of their revenues are from construction, 11% from houseware, and 38% from industrial. So I'm imagining that, well, let me focus on the details first. So it says construction is consisting of mainly PVC pipes and fittings and related products, and it represents the company's largest product line offering at 51%. So this means that you are expecting that as construction continues to improve, it may bode well for them. When I usually hear things like that, though, meaning the automatic pairing of the growth in construction to the growth for the company, just understand it's not a direct correlation. They're not the only company in the market, though, you know, a rising tide will lift all ships. So, you know, the space growing does mean more opportunity and prospective business for them. So just bear that in mind. So it says these items are used mainly in plumbing and electrical work. So I'd love to know if, for example, they have, you know, specific contracts with like developers, you know, hotels. You know, those are the things I'd love to hear about. I'd love to hear their clientele, right? So they mention NWC here, but who are some of their other regular customers who are maybe outside the distribution partners? I'd love to hear some of those, because that would give me an idea as to what industries they may be focused on or dominating in. So it says these products are distributed through large wholesale and hardware stores that in return retail them to the final consumer, as well as directly to building contractors and government entities, such as National Water Commission. So when it says government entities such as, it implies more than one government agency, in my mind anyway, depending on how you read it. Building contractors, I just love to know the size of that market for them. You know, are they serving 20 building contractors? Is it 10 government agencies? Those are the kind of questions I have. Industrial packaging, it says here, this consists of products of food, distribution, and industrial material packaging, such as crates and buckets. I believe Red Stripe was mentioned, or you saw the Red Stripe crates. Now, Red Stripe does a lot of sales, I'd say, or revenues in terms of their products being sold. So I don't know if that's necessarily a correlation, because again, in my mind, I'm thinking when you provide a crate, how much of that crate does the client retain versus continue to purchase? That's the only thing I thought about here. But I'm imagining they will need okay. All right, so I think my internet went for a second. Hopefully you're hearing me now. Can you hear me? All right, so I see it just went through. So I'm assuming you're hearing me. There may be a small delay. So I'm just gonna continue from where I was talking, right? So I was mentioning the fact that I was concerned, or not necessarily concerned, but curious as to what level of business they would do. So for example, it mentions here the industrial, business such as crates, buckets, etc. I was just saying I'm wondering how much kind of revenue growth they see from clients. So I'd be interested in that. And then plastic housewares, of course, these are the product lines that are produced for businesses that address daily household needs, such as cooking, cleaning, laundering clothes, and gardening, which is distributed through large wholesale and hardware stores. I'd love to know who some of those stores are, because that would give me an idea as to how much business they're doing through that channel, right? But this breakdown here, I appreciate it, I must say, because not every company gives us this breakdown. So greatly appreciate it. So let me share my other screen now and show other one, which, okay. So what I'm going to do here is go through the prospectus, or looking at their financials, right? So I wanted to go through the 5-year summary. So I brought the data into Excel. So I'm going to do that. Let me bring that up here. And so I figure we'll look at it in Excel. That may be easier to work with. Okay. All right, so hopefully you're seeing my screen okay. Sorry, stop sharing for a second. Let me know if you have any questions while I'm preparing this. Okay, let me close that. Reopen it now. And of course, I can't find it. Give me 1 second. Okay, cool. So you should be able to see my screen just fine now. I put it in Excel because I figured it'd be easier to zoom. So we have here numbers from 2019 to 2023, and then of course we have Q1 2024, right? So I thought the revenue growth was good to see in terms of just the growth in the business. I thought the fact that the revenue spiked after the pandemic was a good thing, but I'm always they're far removed from the pandemic, I would say, meaning we're not in 2022. If we were in 2022, then I'd be concerned as to whether or not they'd be able to sustain that growth. But seeing that they were able to do it for 2022 and 2023, I think that augurs well for them. And if you look at what they've done in Q1, 600 million in Q1, if you multiply that by 4, that'd be 2.4 billion in terms of revenue. That would be certainly their highest revenue in terms of for a year. So that's a good start to the financial year for 2024, and also good to see that they were able to sustain over 2 billion. Now, I would have liked to see personally just a little bit more growth on the yearly revenue here, but they of course show the numbers down below. I mean, certain different factors might have influenced that, but let's move on for now. So gross profit stood at 602 million for 2023, all the way up from under 400. So that's certainly great growth right there. And then you see Q1 here being 234 million. That's very good to see, right? Admin expenses is an area that I'm always looking at to see how companies manage that. What I have noticed, something that we see and hear a lot, when companies list their admin expenses will certainly increase, right? There are listing fees that the JSE has, there are monthly fees by the JCSD and other expenses that they may need to undertake. For example, even the creation of their reports, etc., may be a cost for them. Maybe auditing, just more fees will be on the admin side. So you've also seen from 2019 till now, that's, you know, significant growth in terms of admin expenses. So I'd like to see what 2024 looks like in terms of expenses. Because again, if you look at this as 80 million for admin expenses for Q1, you multiply that by 4, that's 320. That would surpass what they did in 2023, right? So those two expenses are certainly worth watching. Profit from operations for Q1 was close to half of what it was for the entire year 2023. So that's certainly a good sign. Finance costs, so they've spoken about their debt and that reduction. So the finance costs going down is actually a good sign here, from 109 million in 2022. And I'll get to the liabilities a little later. And then profit before taxation was 179 in 2023, and profit 150 million. Now you will expect that this taxation number will be 0 because they'll now be a junior market company. So they'll be able to get, if even this 29 million in savings from taxes. So it is expected that, again, if you multiply the quarter by 4, which is of course not the best way to do it, but just give you an estimation. You don't want to watch the Qs as they progress, but this is certainly a good sign for them in terms of Q1 and how they would have ended 2023. Right? In terms of assets, they had a 5-year summary. Now, I think for their assets, I'd rather go to their Q1 results, so I'll skip that for now. And then we have cash flow from operations, of course. For 2023, it was significant, but for Q1, we saw where they had about 100 million additional in receivables. So that is certainly a concern. Their receivables grew significantly for the year. So we'll look at that in a second. So that would be a question as to how they're going to manage that. And cash flow from investing activities and financing activities, that's normal for those to be negative. They would have paid a dividend to their existing shareholders in 2023, I believe. And investing is usually like, you know, property, plant and equipment, you know, etc. So that those, I'd say, is normal. Cash and cash equivalents is something to watch, I would say, in terms of how they manage their cash position. They did mention using some of the proceeds to working capital. So I'd like to see how much is left after they make their investments. So just something to note there. But their cash for Q1 was 73 million. And of course, they'll have the proceeds from the IPO to add to that as well. Some ratios here that they listed. Current ratio is a good sign to see that, meaning them being able to take care of their short-term liabilities. Debt to equity and debt ratio here, something to watch. You see trending down, of course, here. That's a good sign. Debt to equity, something to watch as well. But as they reduce their liabilities, that ratio will continue to improve. And then they would have things like return on equity. I'd like to see maybe how it, I guess, sort of normalizes over the next year or two, I would say. And it shows here their growth year on year. So this was what I was alluding to before in terms of growth in revenues, right? This was the part that I wanted to ask them about, you know, because we haven't seen necessarily consistency. We had that major growth in 2021, 4% growth for 2022, but actually negative growth for 2023. Of course, you know, in 2024 has not happened yet. So I'd love to hear how they plan to achieve that, you know, 10% growth that they've mentioned. And, you know, for the rest of it in terms of gross profits, etc., you're seeing those numbers here. So I wanted to go to the Q1 result. I did just 3 charts. I didn't necessarily have the time. So this chart would be, let me zoom in a little bit more again. So this would be their operating expenses. Again, I'm looking at this because it's a manufacturing company. So how they manage their expenses would be important for me to look at. So this would be your administrative expenses. You're seeing the growth over the last 5 years. And then of course, selling expenses as well. Their cash and cash equivalents, something to note. As I said, we're going to look to see how it kind of trends for 2024. They should have cash in hand from the proceeds of the IPO, but it's to really see how it progresses from there. And then this is revenues and gross profit over the last 5 years. We saw that slight decline for 2023, but of course, as I mentioned, they're projecting 10% growth in revenues moving forward. All right. Let's go to the MD&A for the prospectus. Let's go to Q1. All right, I wanted to just go through the MD&A for Q1. Just a couple of minutes here, then we'll talk about their dividend policy, and then we'll wrap up this review, right? So just let me pause here, get some more questions in. So it says here, what do you think about the infrastructure so government of Jamaica has coming up and OMNI's position in the market? I think you need to rephrase that question. I'm not sure what you're asking here. In terms of their overall position in the market, I'm not quite clear as to that as yet. I'd love to hear more. So ask me that question after the CEO interview on Thursday. What do you think about infrastructure developments the government of Jamaica has come up? Okay, that's clearer. Okay. So it is, as I mentioned before, the growth in the industry does bode well for all players in the industry, but there is no guarantee specifically for them and those projects. So if they mentioned that they are, for example, they have, a relationship already or fast track to specific projects, etc., which they wouldn't necessarily be able to say because the government would have a process that they have to go through. But it's just unclear. It's unclear is what I'd say. Which quarter is normally the best for them? I don't know, right? We don't have that data. That's I guess the only negative or downside to getting a 5-year summarized. We don't really get to see trends on a quarter by quarter basis. And that's why we would want to see at least the full year in terms of quarters. We get to see, the quarterly results, see how they perform on a quarter by quarter basis and be able to extrapolate trends from there. One thing when doing business with government, a lot of receivables will be in the books on top of what is already on it. So we'll get there. We'll get there. Admin expenses already sky high. Was that before prepping for the IPO? So when I went into the notes, and we'll get there, right? Admin expenses, they were high. So I saw, staff costs, directors' fees, etc. And I saw a kind of jump for 2023. Now, what I noted was they would have engaged, I think, NCB Capital Markets back in 2022. So they may have been working on the IPO for all of last year. So they might have consulting fees, legal fees, etc. I'm not sure, but if I have time, I'll go over that. But check the notes. It shows all of their expenses broken out. And you saw that jump, I believe, from 2022 to 2023. But as I said, it's not necessarily uncommon to see that large admin expenses, but I am expecting that to further increase because they are now listed and there are additional expenses that they will have to factor in. Maybe they'll need additional team members, etc. Now, it bodes well for them that they won't have that taxation expense, but I am expecting some increase there. So it's interesting to see as the expenses go up, how the revenues go up and how the profits go up as well. So that's really what I'm looking for. What competitive advantage do they maintain over Tanquil or Fosrich, or is OMNI a player in the commercial? So this question about, so L.E.A.R.N, welcome. I think it's the first time I'm seeing you here. When we say competitive advantage, I don't know. from what I gather, there is no proprietary technology. And what I mean by that is most of these companies do well based on relationships, right? Usually you have the same clients for a number of years. You have, an account manager, you get, special pricing, etc. They may get special terms. So when you say competitive advantage, it may very well come down to their relationships, I would say, to the clients that they've had. Now, I heard some videos or saw some videos about, clients who worked with them for years, clients who, speak about their service, quality or products, etc. But I don't know how that would compare in terms of relative to their competitors, if that makes sense, right? Shelley saying, was that a glitch in the matrix? Wasn't that the same question? Yeah, right. Okay, so let's go to reading the MD&A just for Q1, because we just want to understand where they are now and focus on the outlook. That's all we're doing here. All right, so we're not getting into the weeds for the past years. We're focusing on Q1 and then going to look, at the outlook, right? So it says during Q1, they continued to demonstrate resilience and operational strength, achieving a total income of 607 million compared to 603 for the same period last year, right? So we're seeing that they've done what they've done last year pretty much for this quarter. Overall revenue remained relatively stable. Their strategic focus on cost management and operational efficiency yielded notable improvements in key financial metrics, notably, I think, in their operating profit and ultimately net profit. So it's a cost of goods sold decreased to 373 million from 408. That's good to see, leading to a significant improvement in gross profit compared to 196 million the year before, right? So prudent inventory and logistics management proved effective in managing costs, improving their gross profit margin from 33% to 39%. So let's see if those improvements carry forward, right? I think these are just charts. Total expenses, so let's see what they say here. Increased to 122 million in Q1. This was primarily attributed to higher export expenses and one-off expenses related to the preparation for the IPO, right? So we don't know how much, but I did mention it here, including professional fees. So look for that professional fees line item and you'll see the increase in export expenses was due to the company's strategic expansion to other territories such as Panama, which is expected to yield positive results going forward, right? So they mentioned that before, that's a part of their strategic move. So we'll see what that brings, right? It's a finance cost decrease to 10 million in Q1 from 15 million in Q1 2023, primarily due to reduction in debt as a company optimizes capital structure for future growth initiatives. So again, as I mentioned, you are expecting that they won't have that taxation moving forward. So we'll see at least a growth or some sort of movement there, right? Of course, unless they're not able to manage expenses, right? So it says here, for additional context, they're speaking about net profit. Normalizing operating expenses by stripping out one-off expenses will see the company recording an increase in net profit year over year, right? Which is a little bit of what we've been saying. All right, so we'll skip over this part for now. Let me move to here. I want to go straight to the outlook. But I do want to look at their liabilities. Okay, let's talk about here. So the decline in non-current liabilities was driven by a 231 million reduction in long-term loans, sizable reduction, of course, in keeping with the company's strategic thrust to improve its capital structure and position itself to deliver greater shareholder value. Additionally, current liabilities decreased from 749 million to 552 million, right? So we'll look at that a little bit later. And the company's liquidity ratios have improved. And then it says here, speaking about equity, right? So this is the part that I wanted to double click on here, the outlook. So let's go in a little further. So it says here, while there's been a slight decline in the construction sector in the construction sector for 2023, influenced by increases in bank interest rates. We believe this to be a temporary lull. The government has announced several projects to commence this year, including a $10 billion project for road improvement projects throughout the 63 constituencies, along with large residential projects around Jamaica. So again, we're saying that this bodes well for the sector, which should ultimately improve things for them as well, right? The company anticipates that it's poised for tremendous growth, hence their drive to retool and capitalize. There are opportunities in the Caribbean, Central and South America. Right here in Jamaica, there are a number of plastic products required, such as bread crates, chairs, and tables, among others, and they intend to capitalize on that. And then they're expecting to see at least 10% growth year on year for the next 5 years. So this is what we want to watch to see. So the reason why I added my data to Excel is that I want to do a model to see if their revenue increases by 10%, what the rest of the numbers may look like. So that's specifically why I would put it in Excel, because I want to see as the quarters come what the profits may look like for the year. Right. So looking ahead, they anticipate that there will continue to be growth in the construction industry, considering the increasing number of private and commercial real estate development projects. I want to see this. Well, forgive me for scrolling. I'm just looking for something that's maybe not regular Outlook speak, right? So it says here, when OMNI is further equipped with new energy efficient machinery and new product lines, it expects its financial performance to continue on its upward trajectory. So it's counting on the new machinery and product lines. These statements involve both known and unknown risks, uncertainties, and other important factors that could cause the results or outcome to differ materially. Of course, I'm happy that they have that, but that would certainly be implied, right? So I wanted to go to, forgive me for scrolling. I wanted to go to the Q1. We want to look at two things, right? Going to look at Q1 so I have about 15 minutes left. So I want to look at Q1 for their receivables, and I wanted to look at their admin expenses. Those are the two line items that I want to zoom in on just for the remainder of this review. Then we'll talk about, of course, their dividends and so on. So I should have saved the page. I hear David Rose telling me that I should have done that. But I'm almost there. Okay, all right, so I'm here. Okay, so hopefully you can see this just fine. Ooh, that looks very small. So let me zoom in just a little bit more. Okay, that should be better. So I'm gonna scroll down here. Okay, I might have gone in too far. So we're looking at receivables, right? Looking at receivables. That's 443 million for Q1, and we're seeing growth from 398 million, right? So that's what we're talking about, that receivables growth. Now, I understand that as companies grow, this may be something so this may be just, for example, a government client, we don't know, right? And I think there's a breakdown where it shows the receivables from 31 to 60 days, 61 to 90 days, 90 to 120, but 2023. So that would be good to see. So this is not necessarily a red flag, I would say, just something to note, and it's something to watch, because of course receivables would impact your cash flow. If it gets to a certain point, you may need to write it off as bad debt, things of that nature. But of course, it is a natural part of a growing business. So let me just say that before somebody, overreacts. It's natural for business, but it just has to be managed, right? So we'll see how that balance carries over. We spoke about the liabilities as well. So Payables would be a big part of it, as you're seeing here, 508 million. So payables. So of course, their receivables will also impact your payables, and I'm thinking of that just from a business sense, right? The less cash I have because customers owe me, I may not be able to pay my vendors on time. Now, of course, if they have existing relationships, good credit terms, etc. But this could, depending on the terms of the payable, because some companies may charge like a small fee if you take too long to pay, etc. So this is something to watch as well. Them being able to meet these payables, but of course, um, their current ratio shows you that they have enough to deal with their current liabilities. So it's, I guess it's not really an issue from that perspective, right? The long-term loans stand at 333 million, and that would have gone down from the previous year, right? So that's a good sign, and I figure as their finance costs decrease, as they, for example, realize more profits, they may continue to pay that down over time. But again, you just want to kind of watch how that progresses. Inventory is good. I mean, a good stock of inventory is good to see. Property, plant, and equipment, of course, they're investing in that, so that's normal to see. I think everything else, and we mentioned the 73 million in cash, right? So that was it. Let me see where we are now. I believe I wanted to look at Q1 results for, yeah, this was the part for, okay, so this is their Q1 revenue. So let me zoom in just a little bit more. So we're talking about admin expenses for just the growth from last year, right? So ultimately their profit just decreased slightly from 81 million to 77 million. But if you notice here, for example, admin expenses would have gone up. No, they did mention one-off expenses. They did mention expenses relating to the offer, etc. So it would want to see, of course, Q2 and Q3 to see what that looks like. But if you look at the year's numbers, the year in terms of admin expenses is usually 266. So we just have to wait and see where the one-offs leave them when that is removed, right? And the selling expenses would have doubled, right? I think they did a breakdown of that. I don't remember where I might have seen it. So those are just some things to kind of look for how they progress in terms of what that would mean, right? So hopefully that makes sense. That would be it for the financial review. Now I would say go through the rest of the prospectus. The financial results will have a breakdown like where the admin expenses would have gone. There's great detail in the notes, right? So read the notes. It will certainly help you. All right, let's look at their dividend policy, right? So it says here that, let me just bring up my notes here. So it says if the company is admitted to the junior market, the directors intend to pursue an annual dividend of up to 25% of net profits. So last year's net profit, I believe, was 150 million. So 25% of that would be about, half would be 75, half would be 37. It's about $37 million. So if you estimate that dividend, you'd kind of get an idea as to what kind of dividend you may be looking forward to for going into 2025, right? It says here that I'm just reading the second part now in terms of the dividend policy. It says up to 25% of net profits available for distribution after it has provided an appropriate reserve to cover outgoings and contingencies. That's standard, subject to the need for reinvestment in the company from time to time. The company proposes to pay dividends annually, but may change to quarterly given the company's commitment to provide its shareholders with consistent dividend payments. I thought that was interesting to see. To pay a quarterly dividend may be something that excites investors. For me, of course, I'm just interested to see the yield. Of course, a junior market company paying a dividend is always interesting. It depends on how they continue to grow, I would say, because of course, again, one of the questions I'm going to ask is, do you want to be paying dividends at this stage instead of just focusing on growth maybe a year or two, then you start paying dividends? But it depends, right? Companies may want to maintain that because some shareholders may not care about the amount of dividend, but just the fact that dividends are being paid, right? And then of course, finally, how to apply. Now, if you want to apply, let's say you've done your research, watch this video, watch other videos, and you're interested, you can go to ipo.jncb.com. You'll see it on the homepage along with the NCB APO that we covered last week. Of course, the details on how to apply is in Appendix 2 of the prospectus, but you do not need an NCB Cap Markets account to apply. You simply just need your JCSD number. If you've ever opened your account and have a statement with that JCSD number, that's what you use to apply. You do a transfer to the account and just submit that slip in terms of proof of payment. Then you'd go through the process. So you don't need to open an NCB account, though of course I'm sure they'll say that they're welcoming you to do so. Go ipo.jncb.com is where you'd go. All right. So let me see if there are any questions that I missed. Okay, I don't think so. All right. So J Famous is saying, in addition to create manufacturing, what else do they offer? Quite a bit, right? So let me go back to that for those who might have missed it. Let me read here. So they have products in 3 categories. Let me just show it on the screen as well instead of reading it. This slide right here. So it says here, wide range of products. The service markets both locally and overseas. So first category is construction, so PVC pipes and fittings and related products, and that represents, I think, 51% of their revenues. These items are used in mainly plumbing and electrical work, as well as for water distribution and irrigation. These products are distributed mainly through large wholesale and hardware stores. And then, of course, next you have plastic housewares. So these are the products you may see around the home for cooking, cleaning, laundering clothes, etc. Then you have industrial packaging. That's for items for food distribution and industrial material packaging, right? So those are their main product lines, right? Let me recap the offer details as well for those who may be joining us late. So the offer is 500 million shares. These are the pools. I'm trying to say which slide is best. I can show it on this one, no problem. So these are the pools of shares. Now there is a public pool for 120 million shares. That's $1 per share. There's a reserved key partner pool, 233 million shares, $125 million lead broker reserve pool, 125 million shares, and a 20 million employee reserve pool share, right? So the shares are available from selling shareholders and new shares that were issued. Let me now give you the key dates. Key dates would be, so the offer officially opens on May 17th. That's this Friday. The closing date is officially May 31st, but as I mentioned before, based on the size of the offer, if you are interested in applying, you would want to do it sooner than later. My estimation is that it may close maybe Monday or Tuesday, if not on Friday. The only reason why I don't think it would close on Friday is the NCB APO and the Mayberry bond offer that's currently out. But it is a small offer, so I would not be surprised if it closed Friday, Monday, or Tuesday, right? A minimum share subscription is 1,000 shares. Subscription price is $1, and of course, basis of allotment and refunds, etc., are processed after the closing date. All right, so Jovan is saying one thing their business is missing is water tank manufacturing, especially with current water shortage. Well, I think there are companies that may be dominating that space already, I'd say. But who knows? Sometimes products are white labeled for other companies, but certainly something to ask. So we do have another interview coming up with the managing director and a rep from NCB Capital Markets. That's this Thursday. If you're on our mailing list, we've already emailed it out to you. So if you're not subscribed to our mailing list, check the link in the description of this video or over our link tree. It may not be in the description of this video yet, but I'll add it shortly. And so if you just go to any of our platforms, get access to our link tree, you'll be able to subscribe to our mailing list. Whenever there's an offer out, we'll email it to persons on our mailing list, send the link to our prospectus review and any CEO interviews from that offer. Of course, when we have our free classes or other relevant content, we'll post it there as well. I believe I've gone through the salient points of the offer. In terms of how I feel about the company, I'll reserve that until after the CEO interview. I like to get that conversation first to get my questions answered. Then I'll form an assessment. So please let me know any questions you have for the CEO, the managing director rather. Put them in the comments under this video or on any platform you're watching from. I'll ask you to take a moment to like this video. Thank you to the almost 200 persons who are joining us from multiple platforms here tonight. Let me do a quick check. Oh, wow. Completely forgot to go live on Instagram. So I was going to check for comments on Instagram. Oh, I am live. No, I did not go live on Instagram. My apologies, Instagram family. Stephen Ball is asking, do I think there will be this will be the new norm, only one broker? I wouldn't say that. No. No, a lot of brokers have gone through the steps to invest in their own platform. So you should ask yourself, why would they invest in their own platform? Now, it ultimately means, so remember, if I have another brokerage account, I can still apply for this offer. Now, you should think of it as it's not really an issue to apply because it's not like you have to open a brokerage account, right? So I don't necessarily see a big deal with having it available on all platforms because they all allow you to apply with another brokerage account, or at least for the most part. So I think it's a personal preference at times, maybe the timing of the offer, maybe, many factors go into it, I'd say, but I don't see it as a big deal. And I've seen companies make an investment in their platforms, and naturally they would want that to be their preference, is what I would say. But I've seen it both ways, right? I've seen brokers have it on all platforms because I believe the NCB APO now is on all platforms. So usually it just takes some time to get there, right? Shellyan's question is, how do I fund if I use a JMB account? So usually what they do is when you're paying for the offer, if you have an NCB account on Go IPO, you can use that to fund it. If you don't, I believe they should have an option for wire transfer. So they'll give you the banking details, you transfer to it, use a copy of the slip. If I'm not mistaken, I'll double check, but I believe that's how it works. I've used platforms. I've used Sagicor's platforms, VM platform, Mayberry's platform. I've used them all. So usually that's how we do it, right? Okay, so again, thanks to everybody for watching. Please take a moment to like the video, especially if you're watching on YouTube, but also on other platforms you're watching from. And okay, Sean is asking, I'm trying to wrap up the video, but I'm getting questions. I was trying to sign up on Go IPO, but I'm not sure what the broker account is. All right, let me have a look for you. I'm not going to share my screen because I don't want to share my private information. So let me log in and see. Do this quickly and then I'll wrap up. All right, so I've logged in. Read more. Apply to the general pool. You're saying you're trying to sign up, but I'm not sure what the broker account is. Okay, so sign up I need to go to. So Sean Brown, what you can do is, I'm sure you're in our Telegram group. Just message me privately on Telegram and I'll help you. But the broker account would likely be your JCSD number, if I'm not mistaken, right? That's likely the only number you'd be asked for. So that's my guess, but send me a screenshot on Telegram. So if it's asking for a separate, okay, let me just check the appendix of the prospectus, see if it's there. Let me check that. I was gonna say, if anybody from NCB is watching and you can help, let us know. Okay, so okay, so I'm looking at okay, so I believe yeah, send me a message, but I'm thinking, so what I'm used to, I think I'm trying to remember which broker it was in the past. I know in the past there was almost like, I remember one IPO we had to do a kind of, we applied and then we had to send the details to our existing broker for them to send over, something like that. I don't know if that's the case here, but I'm looking at Appendix 2. I'd have to read through it first, but I'd refer you to Appendix 2. That's on page 116, Sean. Check that. That may have the answer you're looking for, but join us on Thursday if it's not resolved by then, because we'll have NCB on and they may be able to guide us through that. All right. Okay. All right. So I think we're officially at the end. Thank you so much for joining, and let me know what are your thoughts about this IPO in the comments below this video. Again, if you're joining us for the first time, be sure to subscribe. Thank you so much for watching. And yes, page 116 of the prospectus. And yeah, I hope to see you again soon.